Good afternoon, everyone. This is Anthony, Wall Street Trader. It's 1:44 p.m. Eastern Standard Time on Friday, November 5th, 2021. This is not financial advice. This is educational. Click the subscribe and click the bell. Be notified of these videos when they come out, as well as thumbs up and share the video with your friends and colleagues who are interested in the graph and RLC or iExec. Intraday updates are on the Twitter link below the video. Let's move into the market. Clearly, we broke this resistance area, no doubt about it. I'm going to get rid of it because it's kind of in the way. Makes things a little messy. Now, I'm going to zoom out again on the graph US dollar just to put things into context. This looks like a giant W. I think we should be probably closer to 1.8 sometime between now and potentially the end of the year. These were my end of year targets that I did back in May 30th of this year. So we'll see if we hit it or not. We could hit it higher. Who knows? We could go down. Anything is possible. But however, Web 3.0, in my opinion, over the next few months are going to heat up dramatically. So the graph US dollar, let's take a look at more short-term price action on this one. We certainly hit a high this morning of around $1.16. It's pretty nice head up and then kind of pulled back. Well, it's kind of hard to say what's exactly in store, but this bright yellow line that you see here is kind of the trajectory that's been going on almost a month, probably 3.5 weeks in the making. I think this will continue its trek up. We could see a pullback of the yellow line to $1. I think $1 is a decent level of support, but we're going to have to continue to monitor this price action. Looking further at it, I think we're also going to have a little resistance at the $1.17, $1.18 range. But if we get over that, then there's really nothing to stop us on the way up. I mean, just generally speaking, this seems to be the area it doesn't want to get past. And this is a 6-month view, right? This is that giant W I'm talking about. All right, so let's go look at the graph relative to Bitcoin. And let's get rid of this obnoxious channel, which is no longer in effect, but will be good to see, what's happening here. So we are hitting resistance at 1804 on this graph to Bitcoin pair. We also have support down to the 1576 area. So we could pull back to this green line, which would substantiate the potential pullback on the graph US dollar pair to potentially $1. Now we were just $1 yesterday, so this isn't serious stuff. But we could pull that down to $1 and rest on this yellow line, which is at $1 from where we are right now. And if it did pass, I think we have another reasonable area of support at 96 cents. So anything there is possible, but I think, if there's a pullback, $1 seems to be realistic with a bounce off that. In the meantime, RLC US dollar is also kind of consolidating under this resistance area at 517, 515. We talked about this line as resistance and support. I think we will continue to chop around here somewhere between 516 and 480. So we'll continue as we move forward here. Just know that, a couple of days from now, this thing will make a decision. And this decision will drive a lot of the price action on RLC US dollar. Now let's go to RLC Bitcoin, which is also interesting here. We also are getting close to a point in time. We do have resistance at 83 or 8400 in that range. And then we also have support down here at the 7670 level. And we're going to watch this. It's compressing a bit here, as you can see. And it's going to have to make its mind up. So I think there's going to be some hot action on RLC US dollar soon, especially, we got a couple of days left in terms of figuring out which way we're going to go between support and resistance. In the meantime, let's go over to Bitcoin. Bitcoin is still over this yellow line that we drew yesterday. It is 1 month in the making, and I think we're going to see something happen here soon. I'm going to get rid of some of these lines because they no longer apply. And I think as we go forward, I think we're going to probably bounce off of this yellow line. A small concern, but a potentially big one, is that if this turns out to be some sort of head and shoulders pattern, we could see a drop here. Now the drop can fall to one of many places. It could fall down to 54, it could fall down to 51, and ultimately the bleeding low would be 48. But we're going to keep our eye on this. This is not something that we haven't seen before, but it is certainly adhering to this line of support currently. So we are currently bullish, or at least I am, for the meantime. In the meantime, going over to Bitcoin dominance, this is the channel down. We can be bearish on this, which it means bullish for altcoins, so long as Bitcoin doesn't go down faster than Bitcoin dominance. And that's the key. So I think we're going to continue to trek down. This to me implies that we have confidence in the overall crypto market. It's more of a risk on trade when you see Bitcoin dominance go down, as things are kind of steady in the Bitcoin market. So that's pretty much all I've got. One other thing around the graph, if you're interested, there has been a vote on reducing the curation tax or data curation tax from 1% to 1% from 2.5%. So they're actually reducing it by 1.5%. That kind of alleviates the curators in terms of giving them a little more of a vig, which is what you want. I mean, who cares about speed of data access if you ain't got data to produce through it? So, they're trying to make sure that they're getting a data content-rich environment in order to serve up that data to those people that want to consume it in high-speed volumes, which is what the graph is really all about. Anyway, so that was interesting to note. That vote happened recently. It was proposed back in July of this year, and as you can see here, it was voted. I think it was voted yesterday, and now they're saying that curators won't have to pay so much tax. Anyway, that's pretty much all I've got. Hope everyone has a good weekend. Take care.